So crypto's been crashing. Everyone wants to know what is happening. Well, there's tons of reasons that people are saying the market's going down. One of which being for the first time ever, MicroStrategy has gone below 1 NAV, meaning that Saylor's Bitcoin holdings are worth less than their total debt. And traders are front running the death spiral of MicroStrategy and its an eventual Bitcoin forced selling. Now, there's tons of other reasons people are saying too. For example, hotter than expected U.S. inflation data. Fed rate cuts odds are crashing for December to where it's now virtually 50-50 on whether the Fed's going to cut rates or not. People are speculating about an AI bubble burst. There's massive leverage liquidations. SoftBank is selling its entire NVIDIA position. And 2 subprime hedge funds just blew up like in 2007. So we're seeing peak fear, peak manipulation. Now you can sit there and believe whatever you want to believe for why this crash is taking place.
The consistent fear that I hear is that there's still this perception that digital assets are not welcome in the mainstream economy. And let me promise you that our effort to change the policy is purely about changing that. We want our fellow Americans to know that crypto and digital assets, and particularly Bitcoin, are part of the mainstream economy and are here to stay.
So if Bitcoin and crypto is here to stay, the most important question that you can ask is not, why is Bitcoin and the rest of the market selling off? The most important question you can ask yourself is, how can you learn how to make money regardless of whether the market goes up or down? Because based on that alone, logically, that just tells me to be more bearish right now and not long any projects until you see this bullish divergence play out a little bit more. So because this is not a strong bullish divergence where the price chart is making very clear lower lows and the relative strength index making higher lows, because we're not seeing that right now, I would want to see Bitcoin's price crash down to like $97,000 or $98,000 and do something like this before I get more bullish. And because we didn't get that price confirmation of Bitcoin breaking resistance, holding as support, in fact, it did exactly what I predicted in my previous video as a higher likelihood. And I'm not saying this to like toot my own horn here because again, I'll take accountability when I'm wrong. But how do you make money regardless of whatever happens in the market? You learn how to look for very specific patterns that give you high quality trades, like this one right here that's a short on XRP that's almost $37,000 in profit. So the first thing that we want to do is identify the trend. So it's very clear that Bitcoin has been in a downtrend ever since the all-time high. We've been forming lower highs and lower lows. So connect the highs, you can see the downtrend. Connect the lows, you can see the lower lows. Now, if we zoom in here on the hourly chart, you can see we're just continuing this downtrend. Now, during a macro downtrend like what we're in on the daily chart, since the all-time high, we can be in these micro uptrends, which are retracement rallies. So a retracement rally is just simply after selling is done, then we see these short-term temporary relief rallies before we continue the downtrend, like what we just went through recently. And now you can see 1, 2, 3 bearish candles. Now, depending on how this daily candle closes tonight, will help us understand if we're going to experience a relief rally or if we're just going to continue in this short-term downtrend on the smaller time frames. Now, if we're in the 4-hour chart, you can clearly see lower lows and lower highs here. So what I like to look for to determine whether the downtrend is done is for divergences. And so when we're in an uptrend, I look for bearish divergences where the price chart makes a higher high, but a key indicator like the RSI makes a lower high. And when we're in a downtrend, I look for a bullish divergence where the price chart makes a lower low and a key indicator makes a higher low. But that's just one part of it to understand. So while we're in this short-term downtrend here on the 4-hour chart, I would want to be looking at the lows on the price chart to see if while we're making lower lows, if the relative strength index is making higher lows, and we're not seeing that right now. So that is sign number 1 that this downtrend is not yet finished for Bitcoin, and we could potentially go lower even with a short-term temporary relief rally on the 4-hour chart. This is a higher likelihood. Just like I said in my video yesterday, it's not a guarantee, it's just a higher probability. So we weigh the probabilities here. So on the 4-hour chart, because I'm not seeing higher lows on the relative strength index and lower lows on the price chart, that tells me that the bearish momentum is still too strong for a reversal right now. So I could go into a more micro time frame like the hourly, and we'll see if the RSI is making higher lows while the price chart is making lower lows. So very clear, price chart is making lower lows. Relative strength index, however, just put in another lower low. So this is sign number 2 for confluence that this downtrend is not done, and the likelihood of Bitcoin getting rejected from this descending resistance right here and selling back off to the downside is higher right now than a trend reversal, unless we see a break of structure, which would be clearing of a resistance and holding it as support. So again, the main resistance that I'm watching is right up here around $107,000 to $106,000. Unless that's cleared, then I really don't care what happens in the meantime. Bitcoin could break all the way back up to it and sell back off with massive manipulation, and we would still be in a downtrend here. Until we clear this high, I'm more bearish than I am bullish. Now, a lot of people are going to look at that and say, oh my gosh, your channel's called Bull Runners. You're supposed to be bullish all the time. And there are times where I'm bullish, but if I'm bullish all the time, that's just delusional. We have to look at the facts here and then also weigh our probabilities to adjust our trading plan. So what I would want to see here for a reversal for Bitcoin is exactly what I just mentioned. That's a bullish divergence. So with the price chart putting in a lower low here and the RSI just putting in a lower low, I would want to see Bitcoin get rejected here and make another lower low, and then the relative strength index to start putting in higher lows here between 30 and 50. When I start to see that, that would tell me that this bearish downtrend is slowing down in momentum and Bitcoin would be likely to make a much larger recovery. Otherwise, the likelihood of rejection from a descending resistance is just higher probability. And we'll see if this plays out here, but this would be my expectations. So that's my prediction. And I'll play this in another video and I'll see if I'm wrong and I'll explain why I'm wrong if I'm wrong. And if I'm right, I'll also explain why I'm right based on what I'm explaining right now. Because the strategy that I deploy in crypto to be able to understand the likelihood of what's going to happen next based on these divergences has been a more predictable strategy for me than just buying and not watching videos or not looking at the price and then just leaving it in a wallet, because a lot of people do that. And those are the same people that most likely bought up here for Bitcoin and are pretty much at the exact same levels right now because they didn't watch these videos and they didn't understand when is the best time to buy or when's the best time to sell based on these divergent strategies. And you could do this on more macro time frames too, because if we zoom out here on the monthly for Bitcoin, you can clearly see the momentum has been slowing down on the relative strength index, forming lower highs here, but the price chart has been putting in higher highs up to the all-time high. So this is actually not a good sign. This means that Bitcoin's bull market is going to be coming to a close soon. Now, it doesn't mean it's over just yet. We're at a very key point here on the weekly chart at the 50 SMA right now. Depending on how this weekly candle closes here, this could be a curtain call for Bitcoin's bull run, because if we see several weekly candles close in a row below the 50 moving average here, then that could be a bad sign for Bitcoin. It's similar to what happened all the way back here last bull run after this bearish divergence was done playing out. So I'll give you an example here, and I've explained this in previous videos because you can clearly see the higher highs on the price chart here from January to February all the way up to April of 2021, and you can clearly see the lower highs on the relative strength index where the RSI failed to reclaim the all-time high here, but then made lower highs while the price chart continuously put in higher highs. And this shows that the bullish momentum was done to the upside. It was time for a much bigger correction back down to the 50 moving averages. Then also to the all-time high, that was another bearish divergence for a higher high here, but yet another lower high in the relative strength index, failing to reclaim 70. So this is what we look for on a more macro time frame to show that the bull run is done. On the weekly or on the monthly chart, when the RSI fails to reclaim 70 and the price chart has put in a higher high, and also the stochastic RSI is all the way up here near 100, you can see a bearish cross. That's a sign to get out of the market. So what are we seeing right now on the weekly chart for Bitcoin? Well, we can see the highest high in the relative strength index was on the 4th of March. And if we just draw this trend line to the 9th of December, you can see how it intersects perfectly with the most recent high on the 7th of July here. So the relative strength index has been putting in lower highs, but yet the price chart has clearly been putting in higher highs. So this is a regular bearish divergence. Higher highs on the price chart, lower highs on the key indicator. And because we're on the weekly chart, this is a sign that the bullish momentum for this entire bull run is slowing down and Bitcoin is near the end if it hasn't yet topped out already. So the likely scenario for Bitcoin here, in my opinion here, based on what I'm seeing on the charts and my prediction, is once the stochastic RSI finds its low, is at 7.51 and 2.31. Once it finds its low down here, we'll see a bounce in the stochastic RSI. We'll also see a bounce in the relative strength index, and it would most likely be met by another lower low between 70 and 50 on the relative strength index. And then I would expect it to either reject along with another bearish cross in the stochastic RSI. Now, depending on where that puts the stochastic RSI, whether it's like at 50 or 80 or above 80 and it goes up to 100, eventually there'll be another reversal back to the downside after this recovery back to the upside. And that recovery to the upside for Bitcoin on the price chart doesn't matter what it does. It matters what the confluence is showing on both of these indicators. So if we're seeing the relative strength index getting rejected from a descending resistance and the stochastic RSI is all the way up here at 100, and let's say Bitcoin bounces up and it's getting rejected from like 112 or 115 and coming back down, then this, in my opinion, right here would be the sign to get out completely, because then Bitcoin would more than likely go into a bear market from there. So if we form a lower high, you have to be okay with that type of scenario based on what these indicators are showing us. Now, if Bitcoin breaks out aggressively and goes to like 140, 150, or $190,000 and just starts to melt faces in like December, January, February, and something like this takes place, then we go into a bear market. Well, we're going to revisit this chart and we're going to talk about it based on what these indicators are showing. So this does trigger people who like to comment things like it could go up or it could go down. Really great insight. When I give different examples like this of a lower high and then it going down, or a higher high and then it going down. But the nuance point here to really pay attention to in this video is it doesn't matter, number one, whether it's a lower high or a higher high. What matters is the confluence that you can see on these key indicators here. Because if the stochastic RSI is all the way up here at 100, and the price chart is not forming a higher high, then you have to take that into account. But let's say, for example, Bitcoin starts to break out and is forming a lower high, and the stochastic RSI is just barely above 20, then that's a sign that there could actually be a lot more momentum to the upside here for the price to break out and make a new high. It's very important to watch where the stochastic RSI is, regardless of whatever the price action is showing, and then also look for confluence here in this downtrend on the relative strength index to see if we are at a descending resistance. If we're not, then that's something to note.